and welcome. You're watching Market Fatafat on ET now. I'm Snehi Shah and with me is Shrishti Sharma. And before we start talking about all the stocks, Shrishti, let's take a look at what the markets are up to as of now, because they seem to be holding on to those gains almost 0.2% higher, above 25,000. But Shrishti, we came as close as 5 points away from all-time high and we've receded. But let's just hope we reach our all-time high level soon. But Shrishti, take us through what the markets are looking like.
First of all, a very good afternoon, Snehi, and that's indeed a good afternoon coming in for the markets. Just kissing distance away from this all-time high numbers, but I think that's worth the wait because the markets seem to be consolidating a bit. Not much gains is what we are seeing on the benchmark indices, but nevertheless, they are successful in holding on to the greens right now. Nifty 50 holding on to the gains of almost 40 points, and Nifty Bank is up by 155 points right now. And it's the broader markets that are seen to be participating very well. In that, we are seeing a lot of these sectors seeing good moves, be it from the fertilizer pack, be it from the life insurance companies, all are seen to be participating in good fashion. Apart from that, on to the large cap, we have now L&T that is leading the charts, more than 2% uptick coming in on L&T. Apart from that, stocks like SBI Life, Bajaj Finserv, HDFC Life are also seeing good gains. And on the back of the AGM commentary for Maruti Suzuki, the stock is also seen to be flying high. On the flip side, we had the tax demand notice for HUL. The stock is one of the top losers. A couple of middle counters are also seeing some profit booking, and some of the consumption plays are seeing some bit of a decline, be it from the Titan, ITCs of the world, but not much as of now. But all in all, Snehi, a good day coming in for the markets, but I'm sure that there are a lot of stock-specific counters to watch out for.
Absolutely, and on that note, let's just kickstart the show and talk about all of these big buzzers in today's trade within a minute. And to do that, from the research team today, we have Jinay joining us, while on the technicals, let's welcome on board Osho Krishan, the Senior Analyst, Technical and Derivative Research at Angel One. Thank you so much, Jinay, as well as Osho, for joining us on the show. Let's get started with all the big buzzers in today's trade. First up, I'm going to talk about Datamatics Global today because that stock has been up and away in today's trading session. The company has today announced that it has partnered with Microsoft to develop its own co-pilot solutions focusing on process automation to accelerate business transformation for organizations. Datamatics has launched a partner onboarding co-pilot available on the Microsoft Team store, which integrates Azure OpenAI with Datamatics intelligent automation platform. And the company has also been highlighted by Microsoft as part of its AI First Mover series, which recognizes companies for their impactful use of AI at scale. So on the back of that, well, upper circuit is where the stock is as of now. 20% higher is where Datamatics is.
Well, certainly great moves on this one, but the other stock that we wish to highlight is Paytm. Look at the move in this particular counter. That's actually a rebound of what we have seen happening to Paytm just yesterday, because there were some negative reports around SEBI notice to the company's director as well as the company itself, and the company has come out with a clarification that it's not a new development. The company has already disclosed all the details previously. They have already made relevant disclosures on this matter, and there's been no financial impact for the previous quarters as well, and the company has been in regular communication with SEBI, and that's why we are seeing a rebound in the stock of Paytm, the stock holding on to the gains of close to 2% right now.
All right, well, let's get in the technical viewpoint now on Amara Raja. Osho, you've picked out that stock for us, and we've seen brokerage notes coming out on this stock. Lots is happening on the fundamental front as well. But what's your view on the charts for Amara Raja now?
Very good afternoon to both of you and all the viewers. Firstly, thank you for having me at your show. Well, now coming to the technical perspective of Amaraja Energies in this counter have been hovering near the 50 and 20-day exponential moving average in past 2 to 3 trading weeks. But on a positive development, it is on a verge of giving a sloping trendline breakout of the previous highs. So I'm expecting that with the gain that it has shown in today's trading session that has been backed by volume, the breakout is likely to happen in this counter. Any breakthrough above the zone of 1590 and 1600 odd levels, there can be a strong upside movement that can be seen in this counter. On immediate basis, 1680 to 1700 can be seen as the potential target, while on a longer duration, one can definitely expect 1750 and 60 to be tested in short to medium term time frame.
All right, that's about Amara Raja. But moving on, and Jinay, let's talk about the first counter that you have picked up, and that is CDSL. Tell us what's the news flow out here.
Well, yes, CDSL is focused on the back of brokerage note by ICICI Securities. They have downgraded to reduce from the earlier rating of hold and with the target price of rupees 1,320. Now, this downgrade basically comes after a back of peak cycle multiples and a possible less than expected earnings growth. Now, if you look at the valuations of CDSL, currently it's trading at 59 times of its 1 year forward core EPS, which is actually almost doubled if you compare it to their historical averages. Also, the price cuts which were seen in Q1 of FY 2025 indicate a possible pass on benefits for the customers, but they will limit a margin expansion for the company front. Also, if you look at the delivery as a percentage for the total cash segment for the company, it declined from its peak in FY 2018 from 26% to 21% in FY 24. And on the back of this, CDSL right now currently trading down with a loss of about 2%.
Okay, so that's the reason why CDSL is in focus. But let's talk about another big buzzer today, and that is Medi Assist. Now, they've announced the acquisition of 100% stake in Paramount TPA, and this acquisition that they have announced represents one of the largest TPA deals in India. The enterprise value of this deal is around 310 crore rupees, and the equity value is estimated to exceed 400 crores. This acquisition will increase Medi Assist's market share, and in the group segment, market share is expected to increase by 6 percentage points to 36.6%, and in the health segment, market share is expected to go up by 23.6%. Analysts also expect the deal to be EPS positive, and FY26 EPS could increase by 12 to 15% is what the street is penciling in. So on the back of this acquisition that they've gone ahead and done, stock is up 8.5% as we speak.
All right, that's about Medi Assist having stellar gains in today's trading session. But Osho, coming to you for the next stock, and that is Chola Finance. All these financial counters are seeing decent moves, but what exactly are you spotting on Chola Finance?
For Chola Finance, this counter has seen a kind of a reversal from the 100-day exponential moving average and has started gaining traction in the recent trading session. Especially yesterday and today, we are witnessing a decent buying in this counter, which is going to give a very strong breakout above the zone of 1400 odd levels. And the time it breaches the zone of 1400 on a decisive manner and on a closer basis, then we can witness a very strong upside movement in this counter. Immediately 1450 to 1460 should be the immediate target that one can expect in the very short term period, but the time it breaches 1450-60 odd levels, then from there onwards we can see a very strong upside movement of approximately 60 plus points from there onwards. So definitely one should keep this counter in their radar and try to accumulate at current levels for a higher targets.
Okay, so accumulate Chola Finance is the call coming in. We also had Chola Finance on the technical radar yesterday, and there was a similar bullish call coming in. So technicals are definitely liking this stock. But Jinay, moving on to you, you picked out Zydus Life for our viewers. Tell us why, what's the news flow and why is this on your radar today?
Well, as Zydus Life is in focus as company clarified on the approval given to Teva for G-Escol HD by US FDA. Now, the company says that the impact of the same is already been affected by the company given in its sales and EBITDA expectations for FY25. Co reaffirms its guidance for an improvement in consolidated EBITDA margin by about 150 basis points in FY25. As the company as compared to EBITDA margins of 27.5% in FY24. So they're expecting about 29% EBITDA margins for FY25, as well as high teens revenue growth, which would be factored in FY25. So on the back of this, Zydus Life, we see an opening at about higher about 3% in early today, but right now trading with the gains of about 0.5%.
That's about Zydus Life Sciences. But with this, viewers, let's move on and let's also hear out from Chakri Lokpriya, who is the managing partner of RSP LLP Shares. His top picks from the pharma sector. Let's go across and listen into his rationale behind it and his top picks as well.
If you look at the pharma sector, it's a tale of two cities of export and domestic. Then as far as exports, the API has seen a lot of traction in terms of product innovation of Indian companies. And that is kind of reflected in the higher valuation, and that's a trend which is likely to continue. On the other hand, companies like Dr. Reddy's, they have individual products which are doing all right. and that will takes care of development. They take their sales through for maybe the next couple of years. And as far as the US price erosion is unlikely, because the price negotiations happen January, February calendar of each year. And so until then, there is some kind of a support. So I think Dr. Reddy and Lupin is looking good.
Alright, so Dr. Reddy's and Lupin are on Chakri's radar, and that's the word coming in from him on the pharma space. But on that note, we'll slip into a very short break. Nifty has once again come very close to reaching the all-time high. So let's see what lies for us on the other side of this break. We'll be right back. Hi there, welcome back. Still watching Market Fatafat on ET now. Nifty very close to reaching its all-time high, just 14.8 points away. But let's wait and watch what happens on that front. But in the meantime, let's talk about all the buzzers in today's trade. And I want to draw our attention to JSW Infra now. That stock also was holding up pretty well. And this is on the back of a Jefferies note coming in. And Jefferies says that it is positive on the private sector ports. And they believe that the trend of private sector ports seeing double-digit volume as well as EBITDA CAGR will continue. They also saying that all India port cargo should rise at the rate of 6% CAGR in FY24 to 30, and port capacity should also go up by 1.3 to 1.4 times. They've initiated a coverage with a buy rating on JSW Infra, and they also remain positive on Adani Ports. And particularly for JSW Infra, they say that the company plans to expand their capacity by 2.4 times to 400 million tons by FY30 from the current 170. And the company has also recently forayed into logistics with the acquisition of Navkar Corp. They also believe growth to be 20% plus from current levels, with group volumes giving comfort on utilization as well. And they expect 20% EBITDA CAGR going ahead as well on the back of potential in organic opportunities. So that's the word coming in from Jefferies on JSW Infra. Initiated a buy rating, and the stock is up almost 5% as we speak.
All right, moving on, let's shift focus to the telecom space then, and we will put the spotlight on Indus Towers, because BofA has come out with a positive note on this one. They do maintain their buy rating on this counter with the target price of 490 rupees. What they're highlighting is that the business has strong fundamentals at play. There is room for multiple re-rating and potential dividend as well. But some of the key events to watch out for will be the new contract by Vodafone Idea, the past dues recovery, and the market share in the new business is something that BofA is looking out at, and indeed a positive report coming in from BofA, and the stock is also holding on to the gains of 0.7% right now.
Alright, so that's the view coming in on Indus Towers. But Osho, you've picked out Dabur for us, and management commentary has sounded positive for the quarter that went by. Tell us, what's your view ahead for the stock in terms of momentum on the charts?
See, overall for Dabur, we have seen a very strong traction from the zone of approximately 600 odd levels towards 650, 660 odd levels. That has been very vertical in nature, and that has given a kind of breakout on the daily time frame. But today there has been some kind of subdued movement that can be seen in Dabur, approximately 1.5% lower. But overall, the trend remains very positive because the counter is hovering near the previous breakout zone. So I am expecting that in the recent period there can be strong traction that can be seen in this counter for a higher target of nearly 680 to 690 odd levels. So one should definitely keep this counter in their watch list and try to accumulate on any dip towards the zone of 640 for higher target of 680.
All right, moving on then, and Jinay, let's talk about JSW Energy a little bit. Energized in trade today. Tell us what's the news flow out here.
Well, as JSW Energy's focus, as JSW Neo Energy, which is the wholly owned subsidiary of the company, has received a letter of award. This will be for setting up a 200 megawatt wind solar hybrid power project, and this order comes from Maharashtra State Electricity Distribution Company. Now, as a result of this capacity award, if you look at company's total locked in generation capacity, it has increased to 17.2 gigawatts, which includes a total backed up login in hybrid capacity of about 2.9 gigawatts. Now in FY 2025 we speak, the company is expecting to have installed a generation capacity of about 10 gigawatts from the current level of 7.5 gigawatts. So on the back of this, JSW Energy currently trading with the gains of over 2%.
Alright, but we also caught up with Satyajit Jain, analyst, metals, mining, cement and utilities at Ambit Capital. Listen to what he had to say about pricing pressures that he's seeing in the energy space.
when you talk about financials, because as of now in India, we don't have, as I mentioned, there's only one battery manufacturing capacity of 1.4 gigawatt hour. So there's no real battery. But if we don't have trade protection, then the company setting up capacities will not be able to generate the commensurate return. So you need, in addition to PLI, some incentives. If there are no incentives, then players won't be able to make money which is why there should be some indicative support from government before companies also look to set up capacities. There is, as I mentioned, global overcapacity that you look at, players who are already entrenched in this space, barring certain bigger players like cattle, which is still making profit, and some other players. Many players in the value chain are incurring losses. So given at some point typical capital cycle at play, there would be some rationalization of capacity, more semblance, more practicality. So there will be a point where capacity utilization picks up and you'll see some normalization of spreads for both midstream and downstream players. But when that happens is obviously anybody's guess right now. But especially in the Indian context, as I mentioned, the situation is somewhat similar to solar value chain, where global players, if you look at Chinese players and all, they are struggling at the current solar module and cell prices. But whereas given the protection we have and the opportunity to export to US, the Indian players as of now are making decent margins. So that similar thing needs to happen for battery, for players to put up investment and realize returns on their investment.
Okay, let's move on from that. Talk about Seagull India, because this stock was also holding up smartly, roughly 2% gains coming in on this stock, and this is on the back of the Q1 numbers that it reported last evening. Remember, this is a very recent listing on D Street, and let's take a look at what their Q1 looked like. It was a strong set of numbers coming in. Revenue has come in at 822 crores versus 650 crores, which is up 26.5% on a year-on-year basis. EBITDA has also expanded smartly at 144 crore coming in versus 87 crores, 66% hike coming in on a year-on-year basis. Net profit has come in at 79.4 crores versus 44.2 crores this time last year, which is up almost 80% year-on-year. And margins have also expanded to 17.5% compared to 13.4%, which is roughly a 400 bip point hike coming in on the margins front on a year-on-year basis. So very strong set of numbers, and on the back of this, the stock is up 2.3% as we speak.
All right, moving on then, let's shift focus to Mahindra & Mahindra Finance, what this counter is doing, because Osho, that's the second financial stock that you are tracking, and indeed looks like one of the breakout stocks as well. Tell us more, which levels are you expecting to see on Mahindra & Mahindra Finance?
See, overall, as you have mentioned, that this is a breakout counter, so I'm expecting that there can be a very strong rally that can be seen, because overall the counter was into a consolidation phase approximately around the zone of 300, and after consolidating for approximately 7 to 8 trading weeks, we are witnessing a strong breakout in this counter. So on the higher note, I am expecting approximately 330-35 to be seen as the immediate target, that is the immediate potential target for short-term traders. But overall, the time it breaches the zone of 330 on a decisive manner, there can be a strong room for this counter approximately towards the zone of 355 to 360 on the higher end. So one should definitely try to gauge momentum at current levels for higher targets of 360 kind of a target from short-term perspective.
All right, moving on then, let's shift focus to Tata Motors then, because this stock is down in trade today, because today on the back of JP Morgan's note where they do maintain their overweight call on this counter, target price is higher than the current market price as 1250 rupees. The commentary is not that on the positive side, and hence maybe one of the factors that the stock is down in trade. What JP Morgan is highlighting, that the JLR operation specifically could face some near-term headwinds due to the supply chain issues. JP Morgan monthly sales tracker for JLR indicates that July 2024 retails have actually declined marginally on a YOY basis. Though the China inventory situation does remain under control, the US inventories and incentives remain stable too, and the incentives in the US have moved higher for everyone, but Land Rover appears to be in a better position vis-a-vis the pre-COVID levels as well. So on the back of the kind of commentary that JP Morgan has come out with, it's not seem to be that on the positive side, and the stock is also at the day's lowest point, down more than 1% right now.
Alright, but as we're speaking about auto, let's put the spotlight on auto major Maruti Suzuki. The company has announced a record dividend of 125 rupees per share. Let's go across to my colleague Sumit Chaturvedi to take stock of the key takeaways and commentary from the AGM that was held today.
It was Maruti Suzuki's 43rd AGM. A number of shareholders were present, and Maruti Suzuki management was also present. Chairman R.C. Bhargava took many questions. He, in a way, emphasized the overall growth path for the company that is going to be. He said that last financial year was best for company, and he also made certain other observation. He said that overall its electric vehicle are going to be important. There will be 6 EVs in the portfolio. Hybrids are for those people where EVs are not working, those places EVs are not working. So he also emphasized that recently some states have realized going by one technology is not the right path. That's why they are adopting or encouraging other technologies. He also said that overall there is a temporary setback in car demand, but it will not lead to any change in strategy of the company. Program for expansion is going as per schedule. Company is also hopeful of small car demand coming back in 2 years' time, and EV is definitely one part of the strategy which they are adopting. 7.5 to 8 lakh car export plan is there, which will be 20% of capacity by 2030-31, when 4 million total overall production Maruti Suzuki is expecting. As far as Jimny is concerned, this particular model, and some doubts were raised about its success. Well, chairman said that Jimny is a lifestyle product. There's no plan for changing it now, and it is more attuned for exports market. So in a way, he gave the overall picture for the company, the path ahead, saying that earlier the last financial year was good for the company, and that's how the dealership inventory, he also touched upon that subject. He said that it's around 38 days dealer inventory, but it's a bit long because of the coming festival season. However, it's manageable. These are all the points were made by Chairman Bhargava in Maruti Suzuki's AGM call today.
All right, then moving on to some of the other buzzers then, and Osho, coming to you to have your take on SBI Life. The stock is already at its all-time high levels, but what a strong mover in trade right now. What are the next targets, Osho, that you are looking out for in SBI Life?
See, from the breakout zone, I am expecting a target of nearly 1920 in a very short-term perspective. This counter is looking very positive. All the insurance space counters are looking very positive, but SBI specifically have given a breakout around the zone of 1800, have consolidated there. That means have made a strong base formation for itself, and then have started gaining strong traction. So from here onwards, the next potential target will be in the range of 1900, 1920. And again, we need to review that whether there should be any continuity in the trend, or there can be some kind of breather or profit booking that can be seen in this counter.
All right, then moving on, and there's an Apple event that's upcoming. Everybody just have their eyes on every September that Apple hosts on to its event, and it's the 9th of September that Apple will host its event in its headquarters in California. The upcoming launch are crucial for Apple as it looks to reverse a global sales trend, particularly in China. And Sumita Karir is standing by with what is being penciled in for this particular event. Take it away, Sumita.
It's the Apple season and it's time for Glow Time. Well, that's what Apple is calling its September 9th event, which will happen at Steve Jobs Theatre in California. In fact, the event, as is tradition, will unveil the latest iPhone 16 generation of phones. In fact, there will be 4 of them with new chips, spanking new processors, larger screens, and new camera features for the Pro model specifically. There won't be any vast difference as far as design upgrades are concerned. However, what will make these products different this time will be Apple Intelligence, which is Apple's AI functions. They're likely to get integrated with this whole new series of phones. And this is something that the company announced at the Worldwide Developers Conference, which happened in June this year itself. Now, other than the new phones, the new Watch Series 10 could also get an upgrade in terms of being thinner. It'll have larger screens. The low-end watch as well could get an upgrade, and Apple's AirPods as well could get a refresh as well. Now, why is this event critical? This event is critical for Apple because it's betting big on new products to help revive its growth for the company in the iPhone and wearables segment. In fact, iPhone sales in Q3 for the company, they were down by 0.94% year on year. In fact, the wearables segment as well recorded a dip of over 2%. So Apple will be focusing on that aspect. And India, of course, remains a key geography for Apple. The CEO, if you remember, did mention about recording a strong performance in emerging markets. This he mentioned during Q3 earnings, and he mentioned about India as well. So India remains an important market. In fact, analysts are also stating that Apple is all set to reach $1.3 billion in revenues in just 2024 alone, and that from categories like MacBooks, iPads, smartwatches, and TWS. And reportedly, Apple is also revisiting its plans to manufacture iPads in India, given the government's push to attract more supply chains. So that remains. So that is all about the big event that is to happen in September. We'll have to wait and watch out for what these exact launches really are.
All right, Sumita, thanks for taking us through all of those details and what we can expect from this Apple event. And Shrishti, it does look interesting because a whole host of iPhones are expected to be launched. But on that note, we'll slip into a very short break on this edition of Market Fatafat. More buzzing stocks on the other side when we return.